Namaste and good morning. Welcome to the SolaAne.com Daily Brief, your daily dose of business news that matters. I'm your host Karan Mehta at SolaAne.com Daily Economical Actions around India and the world. And today is Friday, April 10th, 2026. Markets are back in the green, but the real story is what's happening beneath the surface. Let's dive in. First up, here are today's top headlines. Headline 1, Sensex surges 900 points, Nifty crosses 24,000 as banking and auto stocks lead a sharp recovery from yesterday's sell-off. Headline 2, but here's the catch. Foreign investors are still selling. Bloomberg reports that FIIs continue pulling money out even as domestic investors push markets higher. Headline 3, Oracle has laid off 12,000 employees in India as part of a global 30,000 job restructuring. Tech layoffs in 2026 have now crossed 71,000 worldwide. Headline 4, TCS delivers blockbuster Q4 results with record deal wins of $12 billion and AI revenue crossing $2.3 billion annually. Headline 5, the Asian Development Bank projects India's growth at 6.9% for this year and 7.3% for 2027. More optimistic than the World Bank's 6.6% we reported yesterday. And headline 6, a new 26% US reciprocal tariff on Indian goods kicked in yesterday, even as the earlier trade deal promised lower rates. Let's take a deeper look at the first big story, the tech layoff wave and what it means for India's IT workforce. Oracle dropped a bombshell on April 1st. Nearly 12,000 employees in India, mainly in Bengaluru, Hyderabad, and Pune, received termination emails at 6 a.m. No warning, no town halls. Globally, Oracle is cutting 30,000 roles to fund $1 billion in AI infrastructure, and they're not alone. Amazon has cut 16,000 jobs. Atlassian let go of about 1,600. Blocking shed 4,000. And even homegrown companies like Flipkart trimmed 300 roles and LiveSpace cut 1,000 positions. The pattern is clear. Companies are replacing middle management with AI tools. Team leads, project managers, and directors are the primary targets as organizations flatten their structures. In India specifically, fresher hiring has collapsed from 600,000 in FY22 to roughly 120,000 in FY25, an 80% decline in 3 years. Wipro's latest fresher guidance is just 7,500 to 8,000. But here's the other side of this story. TCS just posted record numbers. Revenue up 10% to 70,698 crore rupees, profit up 12%, and operating margins at 25%. Their highest in 4 years. The real headline? Their AI revenue has crossed $2.3 billion annually, and they signed $12 billion in deals in Q4 alone, including 3 mega deals. So what does this mean if you're running an IT services business or employ tech talent? The message is stark. AI skills are non-negotiable now. Companies that are building AI capabilities are thriving. Those that aren't are cutting costs. If you're an MSME in tech services, invest in upskilling your team on AI tools, prompt engineering, AI integration, automation. The companies hiring right now want people who can work with AI, not people whose jobs AI can do. Now, our second deep dive, the US tariff situation and India's trade pivot. Remember the India-US trade deal from February that was supposed to bring tariffs down to 18%? Well, things have gotten complicated. A 26% reciprocal tariff on Indian goods became effective yesterday, April 9th. On top of that, the US Trade Representative has launched a fresh Section 301 investigation covering India and 15 other countries. This creates real uncertainty for exporters. But Commerce Minister Piyush Goyal had some counter-programming today. Speaking in Coimbatore, he announced that India is now in active negotiations with 20 additional countries for new free trade agreements. This builds on the 9 FTAs signed in the last 3.5 years, which already give Indian exporters preferential access to 38 developed nations. The India-EU deal alone removes tariffs on over 90% of goods, textiles, leather, marine products, gems, and jewelry. Here's the smart move for exporters. Don't put all your eggs in the US basket. India's own data shows that 59% of export growth in the last year came from 24 markets outside America. Europe, the Middle East, Africa, and Southeast Asia are where the diversification opportunity lies. If you're an MSME exporter, start exploring these FTA markets now. The government's MSME export promotion schemes can help with trade fair participation and buyer-seller meets. Some quick-fire updates before we wrap up. The ADB is more bullish on India than the World Bank, projecting 6.9% growth for FY27 and 7.3% for FY28. They cite strong domestic consumption and recent trade agreements as key drivers. Housing sales fell 4% in Q1 2026, with Mumbai down 7% and Delhi NCR and Pune each dropping 11%. Unsold inventory has hit 519,000 units. If you're in real estate or construction, the affordable segment is the weak spot. Premium homes above 2 crore actually saw 46% more inventory added. Southern markets like Chennai and Bengaluru are the bright spots. In a big insolvency development, Adani Enterprises has won the battle to acquire Jaiprakash Associates for 14,535 crore rupees. JP founder Jaiprakash Gaur publicly endorsed the deal. The company has cement plants, real estate projects including JP Greens, hotels, and infrastructure assets. The Supreme Court has not stayed the NCLT approval. And in startup land, while overall funding is down 19% year-on-year, AI investment surged 73% in Q1 2026 to 2,110 crore rupees. Investors are being more selective, fewer bets, bigger checks, and a clear preference for AI, clean tech, and deep tech. So what does all this mean if you're running a business in India today? 1. The tech talent market is reshuffling. If you've been struggling to hire developers, this layoff wave means experienced talent is suddenly available. But hire for AI skills, not just coding. 2. Diversify your export markets. The US tariff situation is unpredictable. The 20 new FTAs India is negotiating will open doors. Position your products for EU, Middle East, and ASEAN markets now. 3. Markets recovered today, but foreign investors aren't convinced yet. 6 lakh crore was added to market cap in one session, but this rally is driven by short covering and domestic money, not FII conviction. Don't make big investment decisions based on one green day. And 4. If you're looking at acquisitions, the current environment is creating opportunities. Smaller IT firms, stressed real estate projects, and manufacturing units facing margin pressure. These are all potential deals. Head to 16ain.com to explore what's available. That's your SolaAni.com daily brief for today. If you're thinking about buying or selling a business, head over to SolaAni.com. That's 16ane.com, where we make business deals Sola Aane Pakka. Have a great weekend, and we'll see you Monday.